Good morning, good afternoon, good evening, and welcome to our 319th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. The way this call works is this is an AMA like you see on Reddit. You can ask me anything. You can ask me business questions, startup questions, investing questions, personal growth questions, etc. And my goal on this call is to humbly take your career, your happiness, etc. to the next level. So let's begin. Keep typing your questions. There's lots today. I had a great vacation. I went to Europe for my 25th anniversary. It was a lot of fun. We brought two of my sons. We brought Andrew, and then we brought Dylan. My middle child is working right now, so he couldn't come. It was great, and it really reminded me the importance of, instead of buying things, you buy experiences. And it really helps you from a culture perspective to be able to bond with people in business as well, if you've traveled, that is. All right, one quick housekeeping announcement, a couple actually. As you can see at the bottom here, in that white font with the black background, I have a 3-day in-person graduation and networking event coming up this September in the Bay Area. You can go to the link you see right there to learn more. If you're in my MBA programs on my website, harounmba.com, if you register, you can attend. It's a lot of fun. You don't need to graduate to attend the event. It's going to be a 3-day event here in the Bay Area. We're going to do a lot of one-on-ones with me. My staff will be here as well. We're growing very fast. We're at like 15 and 20 people now. And we're going to be growing a lot faster than that. I'm bringing on a lot of new people as well, including a new CTO, Luca Annison, who I have taught lots of AI courses with, and we're launching an AI bootcamp this fall. One more quick housekeeping announcement regarding a new course that's going to be coming out in a couple of weeks for my students on my website. It's going to be a forensic accounting course leveraging AI. And I poured my heart into this. I'm partnering with Gary, an investment banking student of mine. He has a wealth of experience. You're going to be able to do a lot of deep due diligence on companies using AI. And we'll be analyzing the footnotes as well within financial statements, something that I don't think anybody has really taught online before. Should be a lot of fun. Let's get to your questions now, and thank you. All right, first up, Tommy J wrote, "Good morning, Chris. Welcome back. Thanks. So good to be back. The way you know that you found your passion in life is you look forward to returning from vacation to do this." Yeah, so I've certainly found my passion. It took me a long time. And then the question is, what methods would you recommend to stop procrastinating and be more productive? Yeah. So I learned from Tony Robbins that you have to set deadline dates and you have to document everything. And I'm going to give you a template in a second that'll help you and everybody in this call accomplish 10 times more every single day. Now, Elon Musk, who of course is in the news a lot these days, he said if you set a deadline date of 3 years, you'll get it done in 3 years. If you set a deadline date of 3 days, you'll get it done in 3 days. So what I'm going to do is I'm going to provide you with a template. Now, for students in my courses on my website, I've got a very detailed 1-day planner that materially helps you to accomplish your goals. But what I'm going to do is I'm going to give you a light version of this you can all download right now to make you much more productive. Let me show you how it works. So what we're going to do is we're going to go together to this website, harounmba.com/schedule, all lowercase, harounmba.com/schedule. Here we go. And what you can do at this website is you can download this 1-page template. Okay, and I'm going to show you how to use it, and I promise you it's going to help you materially accomplish more every single day. Now, this is kind of dated, but what you do is this is what I used years ago. You print this out every day and you complete it by hand, okay? And what you do, and you can change it, it's just PowerPoint, right? Is you're going to schedule everything you're going to do the next day, the day before. And then at the end of each day, you're going to score yourself. Now, this is very subjective, but the way you score yourself is if you missed a meeting or you didn't work out, for example, or you didn't pray or whatever's important to you, it's important to me to pray, then you'll take off 5 or 10%, whatever it is, and then score yourself out of 100% down here. Then, before tomorrow, you're going to create another schedule. And you write down your goals up here as well. For me, I score myself at the end of the day. I put God first, it's just me. Then family, diet, etc. So again, you can download this. Just go to my website, harounmba.com/schedule. I don't ask for your email or anything. You can download it for free. If you have questions about that, please let me know. And the bottom line is, if you want to get something done, you give it to a busy person. There's a reason why very successful executives and companies have a perfect life, because they stay busy. But when you go on vacation, for some reason, we don't have time to work out or even exercise, which is what happened to me. I put on a couple of pounds. You can probably see here. Yeah. All right, next question I've got here is, what are ways to develop confidence and executive presence? Yeah. So what you have to do is you have to tell yourself, I don't care what people think of me. And I'm not telling you to be rude or disingenuous, but this works exceptionally well. It's kind of like when you ask somebody out on a date. My wife, who I've been married to happily for 25 years, is way over my head, way out of my league, I should say. She's great. But if you ask somebody out and you're not confident, right, they'll sniff that out right away. Confidence leads to perceived competence, always. So always tell yourself before business meetings or presentations, or when you're asking somebody out on a date, always tell yourself, I really don't care. And the same thing with an interview. The second an interview starts, right before that second, I want you to tell yourself, I just don't care. And we are always our own biggest enemies. Stop the self-sabotage. You do it to yourself. We do it to ourselves. Okay, it's like the Rodin sculpture. I think, therefore I am. If you think you're confident, you will be. Just stop judging yourself. And when I say you, I mean all of us, myself included. Now, one of the best charts I've ever seen, keeping it real here, is this. I'll go through this quickly. I've shown it before. All right. And for those of you that are coming to my graduation this fall, when you meet me, I'm a tiny man. Sorry. All right. So this chart here, this is your age. And right here is give a damn. Now, when you're young, when you're down here, you're younger. You don't care what people think of you. You have meltdowns in restaurants. I probably did. And when you're older, up here, you don't care what people think about you. The problem is when you're in your 20s, 30s, 40s, 50s, sometimes you're up here. You give a damn what people think. I want you to eliminate this triangle of despair at all costs. And I want you to live at this level here, kind of like the best entrepreneurs do. They don't give a damn what people think of them. Again, I'm not saying be rude or disingenuous, but live right here at this level. If you don't live at that level, you won't take any risks, right? And remember, you only have to be right in business one time. And your homework, I'll make this quick. I've done this before. Everybody get a pen, please, or download that one pager I gave you a minute ago, the slim version of this. And what I want you to do is write this down. I don't care what people think of X, okay? And fill in the blank for X. Do it 10 times. I don't care what people think of my job as a teacher, right? People don't talk to me as much as they used to when I worked in VC. I don't care. I don't care that people find out that I'm trying desperately to get the Switch 2. It's out of stock, but I'm going to buy it. I'm a man-child. I don't care. It's a subtle art of not giving a damn. I promise you, if you live your life this way, you'll be much, much happier. And the reality is, people aren't judging you anyway. They got their own problems in their head. In fact, when you give a presentation and you see somebody giving a presentation and they kind of mess up, which I do all the time, you like them a little bit more. It's just because they're real, right? So just be you, because everybody else is taken. That's a great quote from Dr. Seuss. Let me move on now to the next question. Okay. Next question is, when is the hiring circle for asset management companies? When does it start? You're saying there. Yeah. So if you're in university right now, undergraduate school, it's usually 18 months ahead of plan, right? So for the big investment banks, my son Andrew, who's third year at Berkeley, he just got a job offer for 18 months from now working at a top tier investment bank. So you got to schmooze early if you're in school. And if you're not in school, you can still get a job in investment banking or finance, etc. And the way to do it is to set up tons of informational meetings. And if you're interested in learning more and joining my newly launched Finance Bootcamp program, you can always go to the description of this video, click the link, and set up a call with one of my staff to learn more. But relationships are always more important than product knowledge. And so if you're trying to get a job and you're trying to change careers, the worst thing you can do is apply online. What? I say that because whenever you see a job opening online, you apply. You have a 1 in 250 chance of getting that job. And the person that ultimately gets hired knows somebody at the company. And so if you work with us, what we do is step 1, we change your LinkedIn profile. We make it incredible. Step 2, we help you to write lots of articles so you can be thought of as a thought leader on your LinkedIn profile. And step 3, or 3th, as my son Andrew used to say, they grow up too fast. What you're going to do is we're going to teach you how to network on steroids, get tons of informational meetings. Now, when you get informational meetings with anybody in business, I always want you to tell yourself this. People are usually motivated by 3 things in business. Number 1, they want to make more money. Number 2, they want to get promoted. And number 3, they want to enjoy the people they work with. It's true. So with that in mind, we help you with these strategies in terms of bringing 1-page write-ups, right? We have tons of write-ups for every industry, so you can add value, help the person that you're meeting with. For example, if you got an informational meeting with somebody that works in sales, and 75% of all jobs in finance at investment banks are sales related. But if you got an informational meeting with somebody that works in sales, maybe they work in private wealth management, I want you to do this, and I help you do this. I want you to get a list of 5 people that could be their potential clients. And I want you to put it on a 1-pager, one of the many templates I give you. And in your informational meeting, I want you to bring this up. You bond before business first. You talk about the weather, the news, etc. Then you transition to help them. Who does this? And if you think that's too much work, and I say this with love in my heart, how badly do you want that job? Every battle is won before it's been fought. That's a famous quote from Sun Tzu. All right. Next question is, Sanjay wrote, I've had more than 100 informational meetings, not so many good guys. Okay, yeah. So if you're having issues getting a job or even getting informational meetings, let me know exactly how you're reaching out to people. I recommend using LinkedIn only. Do not ever use email, because you've all checked every in-mail you've received on LinkedIn, but certainly not all emails. And you want to keep your message short. You want to mention 1 or 2 things you have in common with this person and ask them if they have time to meet. Don't say why you want to meet. If you do, like I'm trying to get a job, they won't answer. And if you think people won't take meetings with you, I promise you they will. Here's how. Imagine it's 20 years in the future and you're way more successful than you already are today. And somebody 20 years younger than you reaches out to you. And they went to the same high school as you, the same university, maybe they're from the same hometown, went to the same church, whatever it is. And you get a message from them. And they say, John, for example, hope all is well. I also went to X high school, the same as you, same university as you, and I'm in the same religious group or whatever it is as you are. Please let me know if you have time for a quick coffee or a Zoom call. Thanks a lot, Chris. Would you take that meeting? Of course you would. Asking you'll receive. It's prophetic. It's been true since the beginning of time. People want to help you. All you got to do is ask. All right. Next question is Trump versus Elon. Will they patch things up? I don't know. Elon, I'm sure you guys saw the tweet the other day. I think it was yesterday. He basically said sorry to Trump. He spoke to him as well. He sort of said it in a tweet. And he said, I regretted some of the things that I disclosed or put on Twitter or X, such as the Epstein stuff. Yeah. I don't think Trump will really forgive him, though. Okay, we live in interesting times. And God bless all those people that passed away this morning on that flight from India to England. Thoughts and prayers. Next question is, from your point of view, what are the best hedge funds ever? Top 5. Yeah, sure. So probably the best hedge fund ever created was called Tiger. And it was created in the 1980s by the late, great Julian Robertson. And what's great about him is he was a long-term investor. The longer the view, the wiser the intention, as Mr. Buffett said. And the reason I mention him is because what came out of Tiger are a lot of Tiger Cubs, meaning people that have started their own hedge funds. There's Blue Ridge, Maverick, Viking, etc. And so the bottom line is longer term oriented investors in the hedge fund industry tend to outperform. You can't day trade. It's impossible. Please don't day trade. It's like going to a casino. And the reason I say that is because there are black swan events. There's only 20 days in each month where you can trade stocks, 20 weekdays. And random events occur like black swans. Random events occur that you can't forecast. Like, what is Trump going to say next about tariffs? Or what is the unemployment number going to be? Or what is the saber rattling going to be between two superpowers, etc.? You have to think long term. Now, Warren Buffett, whenever he invests in stocks, he bought Coca-Cola around 1990. He still owns it today. Whenever he invests in stocks, he always tells himself this: I'm assuming the market's going to be closed for 10 years and I can't sell this. Now, obviously, he knows the market will not be closed for 10 years, but you have to think the exact same way. You got to be long-term focused. And a lot of people panicked during the crazy volatility we've seen so far this year, given the saber rattling with respect to tariffs. Don't panic. Be a long-term investor. And what I want you to do is I always want you to focus on the destination and not the path of each stock you're invested in. And probably the best piece of advice I can give you is don't ever take anybody's advice on what stocks to invest in. Same with me as well. Don't take my advice. I want you to always do your own work. And let me go over here to Excel Hell, and I'll show you a template you can use. So when you do investment research on companies, there's 3 types of research you can do: qualitative research, quantitative, and financial research. And you answer 700 questions that I provide you with in this spreadsheet. And what comes out of this is a 1-page executive summary that you can bring to your informational meetings. And also what comes out of this is a detailed report, as well as a financial model, as well as a dashboard. And this is available to my clients that buy my stuff on HarounMBA.com. You'll bring this to your meetings, and I promise you it'll help you to add value to the person you're meeting with, which ultimately means that the probability of you getting hired goes up. Now, if you're ever meeting with an asset manager, somebody who works in a mutual fund or hedge fund, you can always go to the publicly available filings to see what their largest positions are. By law, they have to disclose every 3 months what they own if they manage more than $100 million. So what do you think they're going to ask you about in those meetings? Of course, they're going to ask you about their portfolio, the positions they own. So you're going to do a write-up on every single company. And I explain that in more details in my finance bootcamp. See the description and link of this video for more details, please. All right. Next question is, can you explain tail risk hedging and also on options, why they're so overly avoided, and what does a quant do? Yeah, a couple questions there. Yeah. So tail risk hedging is kind of like assuming there's going to be an event or a lot of volatility in the market, and how do you protect yourself using derivatives. And the best way I can explain how to do this is with one of my spreadsheets right here. So what I do is I teach you 35 different option strategies to protect capital. Okay, options with just a stock and an option, or 2 options, or 4 options, etc. This is available to my finance students on my website. Now, please, I'm begging you guys, please don't ever sell or underwrite options, because you can lose more than you invested if you get randomly assigned. If you want to buy options, just buy puts or calls, because the most you can lose is what you invested in the put or the call. I can provide more details on that if you'd like me to. All right, next question I've got here is, and then in terms of quants, what do quants do? Well, they do a lot with machine learning, which is a subset of artificial intelligence. And a subset of machine learning is regression analysis. They look for patterns in the data to see if they can make money. So for example, you can always look at insider buying and selling by senior executives in companies to see if there's a correlation between a big purchase in the open market and the stock price a year later, and vice versa. So when I worked in the hedge fund industry, I invested a lot in Activision, ticker ATVI, which was bought by Microsoft. And whenever the CEO founder, Bobby Kotick, bought or sold stock in size, a year later, the stock was up or down materially. And that's what quants do. Obviously, they do a hell of a lot more than just that type of analysis. But they look at patterns in the data. And without data, you have an opinion and not an investment thesis. Always use data. Okay, next question is, so many hedge funds are underperforming as of today. Even their flagship funds are down so much. Humbly, I'm saying I'm up 13%. But again, my fund size is extremely small. I love it. Well, a lot of hedge funds are very short-term focused. As I mentioned earlier, there's a lot of black swan events this year that cause crazy volatility in the markets. You got to be long-term focused. And when I manage money professionally, I found that every year, my performance in my fund usually came down to 2 or 3 ideas I did a ton of research on. Everything else was noise. Okay. Next question is, can you provide a brief example of steps you'll go through if you want to start a mosquito prevention or a dryer vent cleaning business? Yeah, the most important thing you can do is this. Ask yourself this question before starting any company. In 5 years, will this sector that the company is in be more relevant or less relevant than it is today? That's step 1. And the same thing with investing in stocks. And that will stop you from getting seduced into buying value traps, meaning stocks that are cheap for a reason. In the tech sector, whenever a company starts becoming a little bit less relevant, it's almost always game over. So think long term. Okay. Then what I want you to do is this. I want you to write a full business plan. Okay. Failing to plan is plan to fail. Let me see if I can actually open up my business plan step spreadsheet. Here we go. Yeah. So you got to write a full business plan before you launch a company. Okay, and in my programs, and you can learn more on my website about this, what I do is I ask you tons of questions, and you fill this out as part of the Venture Capital Bootcamp program. And what comes out of this is your business plan. Now, the way you know you have a business plan that has a good chance of making it, meaning a higher probability of not going belly up, is if you actually write the entire business plan, meaning you finish it. Now, I provide you with a lot of safety nets in terms of the templates I provide you with, so that you have a lower probability of losing money. Now, in that business plan template I just showed you, I asked you about 700 questions. If you can make it through all of those, and the data adds up longer term, especially your financial model in terms of you being profitable, then you have a good chance of making it. Failing to plan is plan to fail. Okay. And then you also want to look at the size of the total addressable market. When I worked in venture capital, we partnered once with a big VC firm called Kleiner Perkins. And Kleiner Perkins usually does not invest in companies unless the size of the total addressable market is at least $20 billion. And the reason is, in the highly unlikely event that the company they're investing in gets 5% share of a $20 billion market, that's $1 billion in annual revenues. So make sure you invest in markets with a huge TAM. Okay. In terms of finding information for that spreadsheet I just showed you, documents all of that. Yeah. Okay. Sanjay wrote, recently I read that hedge funds made more than $16 billion shorting Tesla. Yeah, it was an easy trade. Hindsight's 20/20. But whenever a CEO or founder takes her eye off the ball by buying a sports team or another company, or they have a pet project, hedge funds usually run for the exits and look to short. And 2 data points make a trend. It happened with Elon Musk when he bought Twitter a couple of years ago. Tesla fell off a cliff temporarily. Then last July, he was very focused on helping Trump win the election, and he did have a huge impact. As a result, he took his eye off the ball. You never want to invest in somebody that is not all in. Now, when I used to work in venture capital, what I did was I partnered with a guy named Saeed Amidi, who started an incredible investment firm, early stage, called Plug and Play Tech Center. And what I used to do is there was 3 of us, including Saeed and myself, that would select investments. We would look at entrepreneurs pitching, like on Shark Tank. And Saeed, who's brilliant, I can tell you his whole story. He immigrated from Iran, great American success story. But Saeed would always ask one question. And if the entrepreneur answered the question the wrong way, he would not invest. And that question is this: do you have a plan B? And if the entrepreneur said something like, yeah, if this doesn't work out, I'll go to MBA school or law school or go back to work for Big Blue, IBM, etc., he would not invest. The answer he's looking for is this: I don't have a plan B. I am all in. Ideas are commodities, but execution is not. The jockey's always more important than the horse. as venture capitalists, we would always rather invest in A management team with a B business model instead of a B management team with an A business model. Why? Because when we see somebody pitching an idea to us, we think of them as being a salesperson. And do I, as a potential investor, get excited about what they're pitching? The best entrepreneurs and CEOs are salespeople. People like Elon Musk, as well as Mark Benioff, etc. And we know that their estimates are way too high. So when they give us their financial model, when I used to work in BC, we cut their numbers in half. And as Mark Benioff once said, we tend to overestimate what we can accomplish in a year, but we massively underestimate what we can accomplish in a decade. The bottom line is the jockey's more important than the horse. And then Sanjay wrote, similar to you, Chris, I read that another Citadel gas trader, Aikshik, left hedge funds to pursue a career in academia. I saw that too, yeah. So he spent 5 years at Citadel, and I think he's from England as well. All the power to him. Yeah. When one teaches, two learn. Okay. Next up, Tommy wrote, when trying to become a thought leader in the industry that you have no prior experience in, would you like to transition and get hired? How do you determine who is your audience? Yeah. So I would use LinkedIn primarily. And whatever industry you're trying to break into, the hiring managers, portfolio managers, if it's finance, etc., that's your audience. So here's what you do. And here's what I did. So when I worked in the VC industry years ago, every week I wrote one article about the problem with business schools and 101 crucial lessons they don't teach in business school. Then what I did, and you kind of have to fake it till you make it. What you have to do is you have to be consistent. Okay, that's social media. That's rule number one, is be consistent. Most people give up after they get no likes or views on videos or clicks on articles, etc. Then what you're going to do is this. You're going to take all the articles you wrote on LinkedIn, okay, over a 1 to 2 year period, and you're going to package it into a book. Okay. Then you're going to bring this to your informational meetings and give this away. Who does that? And if you think that's too much work, I say it again with love in my heart. How badly do you want that job or that customer? Now, what I'm going to do is I'm going to give you my book template for free right now. So you guys can all publish a book. I self-published that. And actually, Obama's publisher reached out to me after I published it, and Forbes called it humbly one of 6 books all entrepreneurs need to read right now. And they wanted to license my book. I said, no way, man. I want ownership. Okay. So what you can do is you can go to my website, harounmba.com/ all one word, write book, all lowercase. Okay. And then what you can do is you download this book template right here. Okay. It's a Microsoft Word. Okay. There's 1 page of instructions to tell you how to put it on Kindle for free, CreateSpace, which is Amazon Print, as well as ACX, which is Audible. All you do is you copy and paste all your articles into here, and then you right click and you select repaginate on the table of contents. Really, really easy to do. And I learned a lot from Gary Vaynerchuk when it comes to repurposing content. So the smartest way to be a thought leader is to write content, put it on LinkedIn, then repurpose that in the form of a book, a vlog, an Instagram post, a TikTok, whatever it is. That way you work smarter and not harder with your micro content. In fact, this is the 319th weekly webcast I'm doing. I started this like years ago. It's so much fun. But I have a team of video editors, and what they do is the 7 best questions that are asked on this weekly webcast are created as vlogs. We repurpose. There's nothing left on this weekly call carcass by the time we're done with it. Yeah. All right. Next question is from Anything, who wrote, hey, Chris, I hope you're doing well. Thank you. Likewise. I'm currently working on a project related to personal finance, and I had a few questions I was hoping to get your insight on. Would it be all right if I sent it to your email? I get millions of emails. I can't keep up. I humbly have more than 2 million paying customers in every single country in the world. If you want, go to my website. I'll show you. And this goes for anybody that has questions about what I do. So go to my website, which is harounmba.com. And then you click down here. I'm covering up the corner bit. You click here, book a meeting. And you can set up a meeting with somebody on my staff to learn more about what we do. Yeah. Okay. Okay, give me 1 second, guys. Ooh, lots of questions here. All right, next up. What do you think is more important? Developing as many skills as you can, or focusing on a specific skill and developing on that as much as you can? Yeah, I don't want you to be a jack of all trades and a master of none. Focus on one skill, and that's it. And a lot of people that work at big companies and they feel that they're underpaid, which many of them are, they quit and they start their own companies. And the reason they do it, makes sense, is because they think they can make more money on their own. But they fail to realize, because they didn't write a business plan, that they're so focused on other things aside from skill X that they're good at. They're focused on operations, raising money, sales, HR, etc. So focus on one thing and one thing only, and do what I do, which is if you launch a company, write a business plan first and outsource everything. Yeah. And everything you do that's not focused on sales is a waste of time. Yeah. Take care of sales, your top line. Everything else works out well. Okay, next up. Jamie Dimon said that the United States bond market could take a massive hit. Any thoughts on that? Yeah, I don't think he knows. I don't think anybody knows. Now, Jamie Dimon is great. He's the CEO of JP Morgan. He's actually retiring very soon. I love the guy. But I don't think he's the best macro predictor. He's been bearish also on Bitcoin forever. And there's a famous quote that I'm going to butcher, which is, economists have successfully predicted 7 of the past 50 recessions. Yeah, just be long-term focused and ignore the volatility. Yeah. Okay. What are the most crucial technical skills to develop in life? I would just say AI prompting. That's it. And I teach a lot about that in my courses as well. Now, Jensen Huang, who's the brilliant CEO founder of NVIDIA, said something shocking recently. He said, whatever you do not study computer science or programming. I was shocked when he said that. And the reason he said that is because AI is taking away a lot of jobs from programmers or developers, right? AI was meant for that, right? And I use it when I code as well. I use AI a lot. And here in the Bay Area where I live, companies like Amazon, Facebook, and many others are they're letting tons and tons of developers go. So the most important technical skill you can learn is AI prompting. That's it. Oh, and Jensen Huang said, instead of studying computer science in university, he recommends studying the liberal arts. I know it sounds out there, but he said the American education system will pass the rest of the world within the next decade. And the reason he said that is, in the United States, unlike other countries, in the United States, when you go to university, most of the time, you don't pick a major until your second or third year. Until then, you study the liberal arts, and it helps you to be creative and think differently and speak gooder as well. And one thing I noticed about American students, and please don't think this is controversial. Now you're going to think it's controversial. But when I worked at BC, I used to teach during the evenings at several Bay Area MBA universities. And I came to the conclusion that American students, regardless of where they're born, and half my students were born overseas, American students are number one in the most important economic category nobody talks about: confidence. Confidence leads to perceived competence. Confidence allows you to sell yourself, a product, a service, etc. One last thing on Jensen Huang. So he said study liberal arts instead. And it's no shock that Steve Jobs used to always say that Apple lives at the intersection of technology and the liberal arts. Liberal arts is cool, helps you to think differently. Yeah. I took art history just so I can meet girls. Yeah. I didn't do that well in the course. Okay. All right. What is the most crucial skill to develop in life? I mean, it's confidence, right? And my job as a parent, teacher, mentor, coach, etc., is one thing: to increase your confidence in all aspects of business, personal growth, etc. With confidence, you can do anything. You can sell. And my job as a parent, my primary job, well, first of all, they have to believe in God and go to church and all that stuff. But secondly, to develop confidence in my kids. I have a gym in the garage, so my kids are focused on this and not bad stuff. I got good kids. Take care of your body as well. If you do it, you'll be more confident. Every day, and you can put this on the one pager I gave you guys earlier today, that one-page schedule. I want you to schedule in time for the gym or exercise. Confidence leads to perceived competence, always. And a great manager instills confidence in the people that report to them as well. And a great manager praises in public, but only criticizes in private. You got to build up the confidence in the people that work with you always. And there's a reason why here in Silicon Valley, 2 guys or 2 girls in a garage can bankrupt and disrupt large established corporations. Yeah. Okay. And then for my kids, quick side note. So since my kids were born, I've said 2 things to them, and they complete these sentences. The first sentence is this: you never, and they immediately say, give up. And the second thing I say is, you always finish, and they say what you start. You never give up. You always finish what you start. Always. And if you never give up, your confidence will be unstoppable. Next question is, what topic should somebody learn about that could become highly beneficial for them in the future? So I just got back from a long vacation in Europe. We went on a Mediterranean cruise through MSC, which was a lot of fun. And it really struck me how important it is to be cultured in terms of understanding different people's backgrounds, how they approach problems, etc. And so I say, just be global in nature, be well-spoken, understand history and different cultures as well. That's a better skill, I think, than learning how to program, because AI is going to do all that stuff for us anyway. Okay. And then Sanjay wrote, I saw Margin Call and The Big Short. We need Money Never Sleeps because Trump is in it. Yeah. So a couple things about that. So my previous 2 vlogs I published were about The Big Short. You can check it out if you want. I teach finance in that video, in Margin Call. And the one I'm working on right now, I'll make this quick, is Too Big to Fail. Okay. And so this here is a trilogy, sort of what happened in 2008 in the great financial crisis, GFC, when we were within 24 hours, bank machines not working. Now, The Big Short is the 2008 crisis from a hedge fund perspective. Margin Call is the 2008 crisis from an investment bank, meaning sell-side perspective. Lehman Brothers was the example in this one. And Too Big to Fail, which is my favorite movie, is about the government perspective of what happened in 2008. So I'm working hard on that. You mentioned Wall Street 2, Money Never Sleeps. I've got that as well, and I will work on that soon. I did Wall Street Part 1. You can check it out on my YouTube channel if you want. So much fun to teach based on this stuff. Edutainment. Okay, and Trump is actually not in the movie, technically. There's a deleted scene. Yeah. Okay, next question is, what books do you recommend when it comes to business, economics, public speaking, and other essential skills that could be really, really helpful? Yeah, so when it comes to economics, nothing, okay? Economics textbooks are boring and theoretical. If you want to learn about economics, just read the Wall Street Journal and the Financial Times every day. The FT, Financial Times, is like the Wall Street Journal, but it's more global in nature. Now, what I do to prepare every day from an economics and finance and business perspective is very simple. When I'm in the shower this morning, I did this. Alexa, Wall Street Journal news.
From the Wall Street Journal.
Alexa,
At GM's.
Stop. That's it. That's all you have to do. Yeah. In terms of learning about finance, a lot of textbooks are way too theoretical also, which is why I teach. However, whenever I go into somebody's office and I meet with somebody more successful than me in their office, which means every meeting I go to in an office, I always look at their bookshelf, see what books they have. And I order those books on the way down the elevator ride from Amazon. So when I used to work at Citadel, I spent half an hour one-on-one talking to Ken Griffin in his office. Good guy, wicked smart. And I looked at his bookshelf, and he had books by an NYU finance professor named Damodarian. So those are the books I recommend checking out. And my father once told me never take advice from somebody not successful. So we take advice from Ken Griffin. All right. Public speaking, I have a course on that. I teach you about that in my courses on my website. But there's a guy named Carmen Gallo who wrote 2 books, How to Talk Like Ted, and the other one was The Presentation Secrets of Steve Jobs. Watch those, or read those 2 books. That's all you need. Yeah. Okay. Next question I've got here is, kids watch, are you saying kids? You're talking to people on the call here. Watch Margin Call, The Big Short. Yeah. I love these movies. And again, on my YouTube channel, I do lots of reviews on movies and stuff. Okay. Anything wrote, if you were to give one message or quote to the world, what would it be? Don't expect to accomplish your dreams in life unless you help others accomplish theirs first. We're here to serve others. Give and you'll receive. It's prophetic. It's been true since the beginning of time. And I want you to all have that mentality too. If you help other people, and you got to do it from your heart because you love people. But if you help other people, they'll come back to help you in the long run. It's called karma synchronicity, call it what you will. And Jeff Bezos, he once said that a company's profitability and customer service are 100% correlated in the long run. A company is only as good as its customer service. And for those of you thinking of starting companies and competing with big established companies, the best way to pitch yourself is as follows. Unlike big companies, I provide you with the best customer support. I'm there for you 24/7, 365. A company is only as good as its customer service. And I also want you guys to mentor other people. Like obviously you got to get multiple mentors or rabbis to help you in your company. I also want you to mentor other people, like your nephew, your kids, people who work in your team, people who work in other departments, etc. And it's crucial because when you do that, when one teaches two, learn, and you're essentially mentoring yourself. You're reminding yourself of what your DNA subfabric is for success. Now, when I worked, one of the reasons I teach is I love helping people. When I worked at Accenture, back in the 90s before I went to business school, I spent 4 years as a consultant. I humbly got this award. It was for the best mentor in 1998 at Accenture. And I did it because I love helping people. You got to love helping people, always, because you're helping yourself. And during my annual reviews, all the companies I worked at, hedge funds, venture capital, whatever it is over the years, and Goldman Sachs, I always humbly did very well. People would, my boss would say, you're doing great, you're a top performer, everyone loves working with you, you're a lot of fun. But can you please spend a little bit less time helping people in other departments? And I could never say, okay, it's just what I love doing. Give and you'll receive. It's prophetic truth since the beginning of time. Let me repeat that quote one last time. Don't expect to, let me do a zoom in here. Don't expect to accomplish your dreams in life unless you help others accomplish theirs first. Okay. All right. Too close. A little far away here. Good. All right. Next question is, how do you get statistical data points for any government for statistics like unemployment, interest rates, etc.? Yeah. A couple of places. You can always go to the World Bank's website, or you can go to the IMF's website, imf.org. But an easier way to do it is this. Just go to ChatGPT, type the prompt, what you're looking for, and always, a best practice with AI is to always ask for the source as well, so you can verify the data. Because quite often, AI products hallucinate. Yeah. Can you explain the strategy of going into business for an exit? What are the important factors for being successful? Yeah. So I'm not a big fan of that, and I'll tell you why. The best entrepreneurs to invest in are not the ones that are short-term focused, to the extent that they want to, start a company and sell it for a couple $100,000 or a couple million. You got to be all in. Like Elon Musk would never sell SpaceX, right? He wants to put a dent in the universe, kind of like the late great Steve Jobs used to say. So I should say you should not have an exit strategy. Give me 1 second. Wherever my voice goes, I use something called Clear Voice. Okay. But in terms of exit strategies and for harvesting a position in venture capital, we used to always talk about an exit strategy for venture capital firms is if the company goes public, which rarely happens. Most early stage companies go to zero. In fact, only 1% of the top 10 venture capital firms in the world, Only 1% of their companies are unicorns, meaning companies that get $1 billion or more market cap. Sequoia, who I partnered with before, Sequoia has 5%. It's unbelievable. 5% of their investments are in unicorns. Yeah. And they always focus on the founder and not the business model. Yeah. Okay. All right. Mindy. Hey, Mindy. Mindy wrote, hey, Chris, hope you're doing well likewise. What do you think about Palantir? Yeah, I know the company pretty well. So when I worked in venture capital, we invested in the company pre-IPO. And we partnered with Peter Thiel's firm, Founders Fund. And back then I had one critique of the company. And the critique was back then that it's a little bit too services oriented, meaning when clients sign up and purchase Palantir's products, they have to feed a lot of data in. It's very manual. It's getting a lot better now. I love the management team, and I'm very, very long-term focused. And when I look at a company like Palantir, do your own research, please. I always ask myself this one question. In 5 years, will this company in the sector it's in be more relevant or less relevant than it is today? I would say much more relevant. Now, I can't comment on valuation. You'll have to do your own research on that. Yeah. Now, for those of you not familiar with Palantir, if it weren't for Palantir, the Obama administration would not have found Osama bin Laden. Palantir looks at patterns in data from an AI perspective and finds trends and suggestions, etc. One of the big risks with the company early on was that it was too focused on governments for clients as well as financial services. It's much more it's much more diversified today. Yeah. Okay. Next question is, I want to know about trading swaps for biotech by having calls as a hedge. Yeah. I'd be careful with that. If you want to, what you can do is you can go to my YouTube channel. And what I did was a very long video on credit default swaps. I did it about 2 months ago. You can learn about it there. They don't really trade on a market, though. It's kind of like you exchange risk between two different parties. So it can be very illiquid. And you have to get a big investment bank to underwrite it as well. So I'd be a little bit careful with that. I'd probably stick with options if you wanted to hedge your bets, so to speak. Yeah. And then in terms of investing in biotechs, so I learned, a good friend of mine, his name is Evan McCulloch. So he's the #1 biotech investor on the planet. He runs all the research now at Franklin Templeton here in the Bay Area. My kids went to school with his kids. And I asked him, how do you successfully invest in biotechs? And he said, well, quite often there's a binary event. They get FDA approval, the stock goes up huge, or they don't, it gets cut in half. And it happens with big companies too, like Biogen, ticker BIB, I think, yeah, back in 2005 got cut in half because they didn't get FDA approval. So what do you do from a risk management perspective? You invest in a basket of them. You can buy biotech ETFs if you want to. If you buy smaller cap ones, you can use a pray and spray mentality or investing approach, which is you can invest in 10 or 20 of them in a 5% position in your portfolio. If one gets FDA approval, it could offset the losses from the other 19 or so. Yeah, it's very, very tough. Okay. What percent of the stocks that you own are in value stocks? I don't know the exact answer, but I'll tell you what most people do. What most private wealth management firms do is they recommend that you take the number 100 minus your age. For example, if you're 80 years old, 100 minus 80 is 20. So 20% of your investments should be in growth-oriented, riskier stocks, and 80% in value stocks, meaning stocks that are not as volatile, ones that have great dividend yields. And the reason is because you don't have as much time in your life left to make up for any losses you might have. Conversely, if you're 25 years old, 100 minus 25 is 75. Therefore, 75% of your portfolio can be in growth-oriented names and 25% in value-oriented names because you have many, many years to make it back. Okay. And then Ray is asking about, or V is asking about leverage. Please don't use leverage. In the fall of 2008, when we were within 24 hours, the bank machine's not working, Warren Buffett said that derivatives, meaning levered instruments, derivatives are financial weapons of mass destruction. Please be careful. And if you want to learn more about leverage, you can always watch my video on margin call, which I published a couple days ago on my YouTube channel. Next question is, if a company holds convertible notes in private companies, isn't that a risk? Yes. Where do we understand the reasons about owning these? Yeah, so a couple of things. If a friend of yours comes up to you and says, can you invest in my company? It's private. I want you to think this in your mind. Don't say this, but think this. Why am I so lucky to be given this opportunity? It's probably because nobody else will invest. The probability of making money on private investments is extraordinarily low, to the extent that, as I mentioned earlier, the top 10 venture capital firms on the planet, only 1% of their investments really make it, meaning unicorns, billion-dollar plus valuations. Now, let me explain what convertible means. Okay, so think of a car that has a convertible, right? Its structure changes. So a convertible usually means this. You invest in a company, right, by lending them money. It's a debt instrument. And when they raise money next time, that debt converts, hence the name, into equity, usually at a 20% discount to the next valuation for the next venture capital range. Yeah. Tommy wrote, how do people own and operate businesses such as certain services business that require professional trade licenses without one? Yeah, you have to have one. Regulated markets, obviously, like healthcare, financial services, the regulators will come after you eventually. Yeah. And what I recommend doing is, if you want to start a company in a heavy regulated industry, you got to go to a lawyer first. So when I started my hedge fund 8 million years ago, my securities lawyer, his name was James Grand at the Securities Law Group here in the Bay Area. He actually had to connect me with FINRA to take all these exams, etc. Yeah. Always talk to a lawyer before you start any company, please, to protect you and your investors. Okay, Ray wrote, can you look at consolidated statement of changes in shareholders' equity and what conclusions do you derive from it? Yeah, so when you look at that, it's usually in the footnotes in the annual report. And what I'm going to do is, in a couple weeks, my forensic accounting using AI course will be out, and I discuss that a lot in the footnotes analysis section. So when you look at annual reports, also called the 10K, you see the 3 major financial statements, and sometimes a 4th, the shareholders' equity statement. And there's little numbers beside there, footnotes, and usually 10 different categories of footnotes, one of which is with respect to shareholders' equity, etc. And I'll talk about this in a lot more detail in that course. Again, it's coming out in a couple of weeks. Okay, what was my best and my worst trade? All right, my best trade was when I was a teenager. I think I was 18 years old. And I graduated high school. And that summer, when I graduated high school, I got a loan. It was from the Canadian government, the province of Ontario. It was a student venture capital loan for $3,000. And I used it to start my lawn care company, which I loved doing. Now, at the end of the summer, and it was interest-free. I was supposed to pay back the $3,000, but I didn't. What I did was I invested in a private company. It was my first venture capital investment in a company called Spectral Diagnostics. And it did very, very, very well, humbly. And so I made hundreds and hundreds of times my investment, whatever it was, at a young age. Then it went public. Ticker was SDI, Spectral Diagnostics. I sold it, I think, around $30 or something back in 1995. However, the downside of that was this. Because I paid back that loan very, very, very late, my credit rating got destroyed in Canada. It was terrible. It was awful. But it was a calculated risk, and of course, I'm glad I did it. Yeah. In terms of my worst trade, I made a lot of mistakes. Probably the biggest mistakes I've made are, watching an interview with the CEO of a company on, Squawk Box or whatever it is, and then investing in the company. That's the worst thing you can do, because CEOs are the best salespeople in the world. You got to do your own research, which is why I developed that 100-step investment template I provide my students with. Yeah. And Warren Buffett once said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Selling something you love because it goes down. We've all made that cardinal sin. And a lot of people made that cardinal sin in the past 6 weeks too, with the volatility in the United States we've seen because of the taco trade. Taco stands for Trump always chickens out. Yeah. And don't focus on what Trump says ever. Focus on what he does. Okay, next question is, have you calculated your return on portfolio as an average for a long period? I've humbly done well. Yeah. But you got to have risk management in place. Like, I don't care if a company has a cure for cancer. I don't want you to make it more than 5% of your portfolio. So here are my risk management tips. Okay. I want you to have at least 20 stocks in your portfolio, and no stock can be more than 5% of capital. Okay. If you invest in ETFs, you can make it 10 or 15% each ETF as long as they're very liquid and the fees are very, very low. Also, I don't want you to have more than 20% exposure to any one sector, like technology, industrial, cyclicals, whatever, retail, healthcare. Yeah, good diversification. And if you're outside the United States, be careful of your exposure to the US dollar. Next question is, hey, Chris, I'm genuinely passionate about learning both business and coding. I really admire your teaching style. Thank you. I would be incredibly grateful if you considered guiding me. It would truly mean a lot. Yeah, no, thank you. If you want, go to my website. There's a link at the bottom of the page to set up a call with somebody in my staff and ask them to set up a call with me. Yeah, thank you. Next question is, what is a swap ETF and a multi-strategy enhanced ETF? Are they riskier? Yeah. So whenever you invest in an ETF, kind of like before, whenever you invest in an IPO, you got to read the investment prospectus. So for example, in my MBA program, my website, we do a case study on Facebook. I was a shareholder of Facebook when I had my venture capital firm years ago. And then they went public in the summer of 2012. And when they went public, they issued this S1 filing. Okay, this is a prospectus, which is written by investment wankers and lawyers, sorry. And it lists all the risks, etc. I want you to do the same thing when it comes to ETFs. Before you invest in any ETF, I want you to read the prospectus cover to cover. Okay, especially the more complicated ones that use options or derivatives or ones that are really levered up, right? Like the 2x ones. You really have to understand what the derivative exposure is in those. Now, when it comes to swaps, that is a minefield. Please read the entire prospectus because the swaps, as I was explaining earlier, it means two different counterparties, swapping risk, like for interest rates or whatever it might be. They're illiquid markets. There's no major market for it, etc. They kind of trade by appointment like pink sheets. Read it cover to cover. In terms of your other question on multi-strategy enhanced ETFs, I think what that probably refers to is diversified products that are levered up, hence the word enhanced. So whenever you see levered ETFs like 2X, long or short, again, read the whole prospectus first because there are derivative instruments in there that could destroy you. Yeah. And then what is the minimum ETF size to look at? $50 million? No, what I do is I look at liquidity. Let me show you guys a great resource you can use for ETFs, which is free. So let's go together to etfdb.com. Okay, let's do it again. etfdb.com. That's etfdatabase.com. And on this free website, it's taking a second to load here. This is me buying time. There's about 5,000 different ETFs that you can look at in a lot of detail. Okay, ETF. There we go. Okay, loaded here. Yeah, there's 5,000 different ETFs you can look at. You can look at ETFs by geography, ETFs by type, like cryptocurrency ones, etc. Okay, and then what you can do is you can look at what the average daily volume is and the fees. Now, since this website's a bit slow right now, let's go together to finance.yahoo.com. Okay, and what I'm going to do is I'm going to type in the ETF for my favorite ETF where I put money when I'm not sure where to put it. Do your research first, which is VU. And you want to look at two things. Number one, what you want to look at is the average daily volume. And you never want to own more than 10% of the average daily trading volume in any ETF. Let me show you what that means. Okay. So obviously this one's plenty liquid. I'll never own 10% of this. So this ETF, the VU, which represents the Standard S&P 500, this trades, let's just say 9 million shares per day. So you never want to own more than 900,000 shares, okay, 10%. And obviously I'd never be able to buy that given the market cap of this. But the reason I say that is because in the fall of 2008, A lot of hedge funds went belly up because they invested in illiquid stocks, and illiquid stocks own you in a down market instead of vice versa. So you want to look at that. What you also want to look at is the expense ratio. Okay, and look at the prospectus as well, because sometimes this data is wrong. But this here means for every $100 you invest in this ETF, ticker VOO, you're only paying 3 pennies every single year in fees. It's really, really low. And of course, you want to look at the holdings as well and read the entire prospectus. If you have follow-up questions, as always, please let me know. Okay. Next question is from Ray, which is, what do you think about investing in Turkey ETFs right now? I actually went to Udemy's office, it was a summer or two ago when I was in Turkey, and I gave a keynote, and they gave me this from Turkey. It's kind of an emerging market. I like it. However, there's always policy risk. So you have to do your research on policy risk. Yeah, if you want to own a Turkey ETF, you can always go to etfdb.com and then search. There's tons of them. Make sure, number one, they're liquid. Number two, the fees are less than 50 basis points as well, expense ratio. And I can talk about that in more detail if you want. You always want to look at the top 10 components as well. Yeah. Okay. Next question is, what is better, to buy Litecoin or to buy Litecoin ETF coin shares, physical Litecoin, with 1.5% expense ratio, fund size 11 million. Yeah. So what you want to do is you want to look at the average daily trading volume as well to make sure that that it's liquid enough for you to get in and out of. That's a really high expense ratio. I don't think I've seen an ETF with that high of an expense ratio before. The less liquid ones usually have expense ratios of around 50 basis points. That seems pretty high to me. That being said, I do own Litecoin. Okay, and I've always publicly disclosed what cryptos I own. Always do your research. I've owned forever the following 4: Bitcoin, Litecoin, which is like Bitcoin, but it's a little bit faster. And the reason there's many cryptos is it's not just a money grab, but also the newer cryptos do something that the older cryptos can't do well. Like Bitcoin's kind of slow. So I own Bitcoin, Litecoin, Ethereum, as well as Ripple. And I set up a Bitcoin IRA many years ago, and I'm not selling it until it reaches $1 million, which it will at some point in my life, I think. It's not going to be a straight line. I don't care about the path. I care about the destination. Yeah. Oh, one more thing. The reason I have this in my hand is this here is a Trezor, or a ledger now, I should say, right? And I hate these things. So when you buy cryptocurrencies, quite often you buy an external, a token you can store it on. And these things are so freaking complicated to set up, right? You have to enter in like between 12 and 36 key phrases. They're so complicated to set up that by the time you buy the crypto, you cut your order in half. You're just not confident in the system. That's why I love cryptocurrency ETFs, at least ones with low enough fees, because you can get in and out very quickly if you want to. And the precedent for this, I love to always talk about, is gold. This is fake. But gold, the ETF for gold, ticker GLD, was released in 2004. And I loved it because I could buy as much gold as I wanted to. It was liquid. I could sell it quickly. And I knew it was real gold as well. That's why I love ETFs when it comes to cryptocurrencies. Instead of using these moronic devices here, you can buy ETFs after you do your research, and they're liquid. You can get in and out as well without as much security issues. And that's one of the reasons why cryptocurrencies have done quite well. Yeah, there's a Trump bump as well. But the second that crypto ETFs were blessed by the SEC, a lot more institutional investors invested. Now, when I first started investing in Bitcoin back in 2012, institutional ownership was 0%. Now it's over 50%. And that's what moves markets. And that's why whenever you invest in stocks, what I always used to do was I would always look at mutual fund inflows and outflows. It's a leading indicator. So if there are massive inflows into mutual funds, what are those mutual fund portfolio managers going to do? Well, they have to buy stocks. They have no choice. So always analyze mutual fund inflows and outflows. Yeah. But I'm very long-term focused. I don't focus on that as much as I used to. Okay, next up, Ray wrote, would you buy a video game ETF? There's really a dearth of investable gaming companies out there right now. The sector has really been consolidated. I mean, there's EA, there's Take-Two. Many others have been consolidated. Activision was bought by Microsoft, THQI. It's not publicly traded anymore, so probably not. Yeah. And if you look at those ETFs for video games, a lot of them are not pure plays. Next question is, are covered calls advisable to trade? No, not in my humble opinion. First of all, I don't trade. I love to be a long-term investor. And also, whenever you invest in cryptocurrencies, just try not to invest in any in any option where you're selling, meaning underwriting them. Because what could happen is the amount of money you lose is way more, can be way more if you're randomly assigned. Yeah. And just do a search on assignment. Yeah. When we search for a small or micro cap, apart from the founder, lead and growing sector, what else to look at first? Positive free cash flow. No, I don't really care as much about cash flow in the short term. So I'm more of a long-term investor. So whenever you invest in stocks, what I always recommend that you do is you try to create a financial model on the company and figure out what you think earnings are going to be in 5 or 10 years, right? And the best investors were like this. So Peter Lynch, who ran the Fidelity Magellan Fund for years, he was a growth investor, but he was long-term focused as well. Like, don't ever look at this year's PE. I want you to look at your earnings estimates in 5 or 10 years and value the company based on your earnings estimate in 5 or 10 years, which is what I teach in my courses. Yeah. And in terms of other things to look at, earlier today I showed you, I'll show you again actually very quickly. There's 100 steps that I look at before investing in a company. I always start with the management team because that's what a company is. And then the very last step around here is technical analysis, right here. Yeah. But you always want to look at fundamentals first, valuation second, and a distant third is technical analysis, if at all. Yeah. And just be long-term focused always. Yeah. Could you share your first glance thought when you open financial tab of YF for Expensify Incorporated or another company that has no clear trend of revenue growth? EXFY. Yeah. So before investing in any company, I would do a massive write-up first. Okay. And it acts as a safety net to stop you from, buying a stock that doesn't have good long-term fundamentals. But I'll take a look here. But I won't be able to answer this question for you. It'll take me a long time to do the research. But the ticker here is, I can look at a couple things. EXFY. Expensify. I don't like the fact that the stock is less than $4. So it could be a risk that it gets delisted. So usually if the stocks are like on the NASDAQ, this company is a NASDAQ, if it's under $4 for a certain period of time, it can be delisted. And what you might see soon is there could be an extra letter beside EXFY, which means it's delisted, which means it's not as liquid. Let me see what liquidity is here though. All right, so the average volume is this. So you never want to own more than 39,000 shares of the company. 39,000 times 2. So that's about 80 grand or so. Yeah. So not enough for institutional investors who really want to look at it, and they move the markets. Yeah. I would first of all check out why is it trading under $4? What is going on? Yeah. And read the entire annual report, the 10K, in a lot of detail. Yeah, especially the footnotes. And find out what the debt covenants are. If they have debt, I have no idea. In the next 5 years or so. There's a reason why it's trading below $4. Find out what the bear case is. Could be a lawsuit as well listed in the 10K. Who knows? Or they're just not profitable. Yeah. Which cyclical sectors are in a recovery phase right now? I don't know. I think the probability that we're in a recession right now is 50-50. I don't know. Sorry. But I like to invest in cyclical stocks. Like airlines and industrial companies like Caterpillar, et cetera, when they're not profitable. Well, the reason is because these companies, you never want to invest in a cyclical company like a Caterpillar, et cetera, when the PE is low, right? Because these companies make a fortune when times are good and they lose a fortune when times are bad. So what you can do is like what one of my best friends, who is probably the best semiconductor investor on the planet, what he used to do, and he recently launched his own hedge fund. He manages a couple $1 billion. He gave me one tip years ago. So semiconductor and semiconductor capital equipment companies like ASML, and others, you always want to value them on an EV to revenue basis. And you want to look historically. What does the EV to revenue trough at? Okay. Don't be seduced into just buying them because the PE looks low. Look at historical patterns when we're in economic downturns. What was the lowest enterprise value to revenue or price to sales? Similar. What was the lowest amount? Okay. Okay. If you thoroughly evaluate a stock you like, but it's grown 80% this year, what will be your thoughts, and at what levels would you set to buy the price? 10% lower, etc. It all depends on what your price target is. And whenever you look at a stock, you always want to look at the risk reward. Risk reward means the percent upside to your target price and what you think the downside is. And the downside quite often, I hate to say this, but it's true, can be a technical support level. So if your upside is 90% and your downside is 10% to the 50-day or 200-day moving average or low channel formation, and that's got a positively skewed risk reward. I don't care how much a stock has gone up recently. All I care about is what I think the stock's going to be valued at in 5 years. Yeah. And you can look at technicals, please, only after you look at fundamentals and valuation. But if you look at NVIDIA, for example, in the past month or so, it's gotten absolutely murdered. But if you look at the RSI, which is very, very low, that was a telltale sign to buy. Of course, they had good earnings as well. But you want to be a contrarian as well. So whenever I buy stocks and I've done my research, I start buying it, right? Maybe 0.25% position or 0.5% on the way to 5%. And I hope it goes down. Yes, I hope I lose money. Why? Because I want to make it a full position. Yeah, just think long term. Yeah, and you got to be like, so Wayne Gretzky, I'm proudly a Canadian living in America. But Wayne Gretzky was very successful. And he was asked, why are you successful? And he said, well, humbly. I was successful, humbly, he said. Not because I skate where the puck is, but rather because I skate where the puck is going to be. And by the same token, you want to invest in stocks that people are going to like. So you got to look for catalysts or reasons for people to be there in the long run. Yeah. All right. Next question is, are you using ChatGPT 4 or 4.5? I use 4.5 when I can, but I also use I use deep research a lot, which is incredible. But it takes like 20 minutes to do a really good prompt. And I think I only have like 20 or 25 per month I can do with that. If you haven't played around with deep research and ChatGPT, start using it. It's insane. Yeah. Apart from Yahoo Finance, do you use other free screening tools such as Ticker, Griffin, etc.? No. I took my first sponsor on my channel last fall, which was Seeking Alpha, and I canceled it pretty quickly. And the reason I canceled it, I think it's a great tool just for screening stocks. The reason I canceled that sponsorship, I'll never do it again with anybody, is because they also tell you which stocks to buy. And I'm not the game of that. I want to empower my students to do their own research. Give a person a fish to eat for a day, teach them how to fish to eat for a lifetime. Yeah. Okay, next question is from Anthony. First time I've seen you on the call. Hope you join us again. Anthony wrote, I'm in my mid-40s, making a career shift from sales into finance. Awesome. I don't have a finance background. My goal is to become an analyst and work my way into a hedge fund. Does your program help with this path? Absolutely. Absolutely. So what I want you to do is I want you to go to my website. I have a finance bootcamp. I'll show you real quick here. So just go to harounmba.com. Okay. I've got a finance bootcamp product, and just click here, book a meeting. I think I'm covering it up in the corner here, and talk to my staff about it. And there's a couple of products. And what I do in my bootcamp products is you get daily access to me, right? You get 7 hours every week access to me in small group Zoom meetings every single weekday. That's 300 hours per year. If you get the higher end version of the product, you get like 10 hours of one-on-ones with me as well. And you get over 500 hours of content you get exclusively on my website. Okay. Next up, Phil. Hey, Phil, how are you? Phil Germany. Phil Germany is my student, my first student to write a book, actually, using my template. Phil did it many years ago. He lives in Ohio, works for Raytheon, I think, and you wrote a book on chess called Super Students. Pretty cool. Good to see you, bud. You wrote, my business is starting to take shape. Excellent. I'm solo and doing everything from business operations to actual product creation and service. At what point should I hire people? Yeah, never get full-times. Okay, get lots of contractors, right? You don't have to do it in the United States. I've got a bunch of contractors in the United States. A lot of them are overseas as well. Yeah, so that's what I would do. Yeah, and what I would do, probably a better way for me to answer this, Phil, is every second you spend not focused, not being laser focused on sales, is a waste of your time. Focus on sales, and everything else will take care of it. So if you want, you can outsource, I don't know, social media stuff to somebody, outsource CFO, obviously have your own accountant as well. And anything repetitive, you can either use ChatGPT, software automation, or hire somebody. Now, the best way to find people to hire, I'm going to show you, this is unbelievable. So there's a website in the Philippines called online jobs.ph. And you can hire people here that do basically everything for like $5 an hour. So I don't know, let's say that you want to get somebody to social media marketer, right? $3 an hour, okay? With a bachelor's degree, $6 an hour. And what some people do, I don't do this, but some people will hire 3 or 4 people to do the same job. And they'll tell them at first, look, I'm hiring 3 or 4 people to do the same job. I'm going to keep one of you. So you can try this out. It is unbelievable. Very deflationary. Yeah. Yeah. And I don't expect those prices to increase because my heart bleeds for the Philippines, but a lot of customer service jobs are ultimately being replaced by AI. Yeah. Okay. And the way I run my business is it's meritocracy. You eat what you kill. Kind of like when I ran a hedge fund years ago. Right. And so I have employees that will make like 20% of everything I sell. Right. And I've got one employee I think is going to make over $1 million in the next 12 months. Yeah. So I don't have cash flow problems because of that. Yeah. Just make sure that everybody is motivated by sales. Everybody needs to be on the same page. Everything we do that's not focused, being laser focused on immediate revenue generation, is a waste of time. I know it's a harsh thing to say, but if you have that mentality subconsciously, you'll be much more successful. Okay. Then you wrote, before you had no employees, but if you don't mind asking me, why are you hiring so many people right now? Yeah, we're scaling a lot. We're growing very, very quickly. And I used to do all the sales myself. Now my staff does it. And one of the reasons is because I want to be laser focused on creating a lot of content and serving my customers. Yeah. Yeah. And we've got incredible ambitions 12 months from now, which I'll disclose 12 months from now. Okay. And then, hey, Sean, how are you? Great to see you, buddy. Sean and I have a lot in common. Scary how much we have in common. He's based in Hamilton. Great to see you. I love you, man. I miss you. Yeah. Your happy anniversary to you and your wife, Chris. Thank you. I hope your son is killing it at his new job. Thank you. Yeah, he's enjoying it. And then you wrote, thanks again for hosting this live stream. I will see you later today. Cheers. Awesome. Looking forward to seeing you, buddy. Yeah. And so Sean is one of my clients. Every single Thursday from 10 until 1:20, I do a Pacific time. I do like a 3-hour, just over 3-hour Zoom call with my clients. Yeah. I miss you, man. Hope you're doing well. Yeah. Give your dad a big hug. Yeah. Okay. Next up, we have Anish. Anish, first time I've seen you on the call. Hope you join us again. Thank you. Anish wrote, hey, Chris, love from India. Thank you. More love back to you. You wrote, belated happy 25th anniversary to you both. Thank you. Crazy. It goes by fast, man. Yeah. Quick question. I'm not into the MBA, but for personal finance, should I stick with your personal finance course or try the Udemy MBA or main MBA? Yeah. Yeah. If you want to buy my single courses, just go to Udemy. Yeah. So on Udemy, I have a course called Entire MBA in One Course. It's 7 hours. But on my website, I've got 500 hours. There's much more stuff too. Yeah. But if you want to buy my lower price stuff, I don't sell them anymore. Just go to Udemy. Yeah. Thank you. Which is a great partner of mine, indirect distribution. And everybody that has their own company, you got to have direct sales and indirect sales as well. So Udemy is one of the many companies I use to indirectly sell my lower price stuff. Yeah. Okay. And if you're curious, Anish, you can always go to my website, harounmba.com, set up a call with somebody in my staff. Okay. Mindy wrote, hello again. what do you think about AI apps like Benson that analyzes companies for stock picks? Completely against it. Always do your own research. I don't like to rely on any AI product or human being to tell me what to buy. And I provide all the tools you need in my MBA program and finance boot camps to be able to do it yourself. Yeah. Careful with AI, man. It's confidently wrong. It makes mistakes all the time. Okay. Which 10 things do you look at in Yahoo Finance for the competitors of the company you're researching, and why each of those matters? If price to revenue is lower for yet unprofitable company, yeah. So what I do, I just use Yahoo Finance just mainly to look at the stock price. Maybe look a little bit at technical analysis after I've looked at fundamentals and valuation, and also look at liquidity, meaning average daily trading volume. And you never want to just rely on Yahoo Finance because it pulls data from other sources. You always want to go directly to the source. So don't ever get the financial statements for any company you're doing research on from Yahoo Finance. You want to go directly to the source, meaning sec.gov. Yeah. Okay. Then you wrote, I've identified 100 companies I want to research, but this will take me too much time. What would be the 10 questions to narrow my list apart from secular growth, industry, founder, lead posts, and positive free cash flow? Yeah, I don't care about positive free cash flow. I don't care about earnings this year. I care about earnings longer term. What you can do is this. So you can always go to etfdb.com, that's etfdatabase.com, and think of a theme you like AI, for example. Okay, so that's top down. Okay, you've done a top down analysis. You think that AI is going to be more relevant in 5 years than it is today. Then what you do is you go to the ETFs that have AI components, and you look at the top positions. Okay, and you find pure plays. Right? There's not that many pure plays out there. And I recommend trying to find small and mid-cap stocks. Why? Because I love to invest in companies that are a 5x5. What does that mean? A 500% return within 5 years. Am I wrong? Almost always. But if I do my research and I'm right, maybe it goes up a couple 100%. Yeah. It takes time though to screen it. And you have to complete the entire 100-step report that I provide you with before investing. Otherwise, just buy ETFs. Okay, next question is, what substitutes PEG for unprofitable companies? EV to sales and the rule of 40? Yeah. So I don't really look at it that way. What I look at is I look at what I think earnings are going to be in 5 years. And I look at the PEG ratio, meaning the earnings growth between year 4 and year 5. Let me explain. So what I generally do is I look to see what earnings are going to be in 5 years based on my financial analysis and my financial model. So for example, let's say that in 5 years earnings is $1. Then I look at the growth year over year from year 4 to 5. If it's 10% earnings growth between year 4 and year 5, I usually make my target price 10 times my earnings estimates in 5 years. And the reason I do that is, let me talk quickly about valuation. I'm going to oversimplify things. But the S&P 500 usually trades very, very roughly historically at around 15 times earnings. And the average company in the S&P 500 very, very roughly over time grows earnings at 15%. So 15 PE divided by 15% is a price to earnings growth rate of 1. That's why I like to analyze companies and come up with a price target in 5 years based on the earnings growth rate then. Yeah. And the only reason to really look at EV to sales is if you want to compare companies to similar companies today. And it all depends on the market environment in the sector. So I'll give you an example. Back in the summer of 2012, there were three cloud software companies that went public, and I participated in each IPO. And at that point in time, that sector was trading at about 15 to 20 times revenue. Okay, it's all relative with similar growth prospects. And they weren't profitable. And so that's how I valued those companies initially. And those three companies were as follows: Splunk, ticker SPLK, which Cisco bought last fall; Workday, ticker WDAY, as well as ServiceNow, ticker NOW. Yeah. And Frank Slootman was the CEO then. He's money. Yeah. Obviously, look at management team too. Yeah. Next question is, what conditions should be met for you to invest in a public company who has been public for only 2 years? Yeah. It's the same as looking at a company that's been public for 50 years. You know, what you're going to do is the first thing you're going to do is you're going to start with the S1, which you can get from sec.gov. You're going to build out your financial model, answer those 100 categories of questions I gave you in that spreadsheet. It's all the same. All I care about is what our earnings going to be in 5 years and what is my price target in 5 years. If it's materially higher than where the stock is today, I'll invest. Yeah. Okay. Next question is, what's your opinion on investing in investment vehicles like Constellation Software, Brookfield Corporation? Any comments on these two? Yeah, Constellation is kind of a roll-up of miscellaneous software products. Some value investors like to look at it. Some private equity folks, I'm sure, are kicking the tires to take the company private, kind of like what happened with CompuWare, CPWR, as well as BMC Software, etc. I'm not really bullish on I don't know, diversified roll-ups. Doesn't really excite me. I'm more of a growth investor. Yeah, they might give off a lot of cash, in which case some value investors might like it. It's just not my cup of tea. All right, Anish wrote, Chris, I believe India is going to do pretty well in the future. I agree. Yeah, I agree. Yeah. Biggest democracy in the world, world's largest country population-wise, and I think they're going to grow closer and closer to being best friends with the United States. And if there's any currency that will dethrone the US dollar in the very long run, like 100 years from now, I think it'd be the Indian rupee. Yeah. Then you wrote, would it be better to invest 20% in international, or would it be even better to lower that amount? Yeah. It all depends. So I would talk to your accountant in India as well, because there might be certain tax implications you get from your retirement savings programs to the extent that a lot of it has to be in domestic companies. I just don't know. Yeah. Okay. Next up, Harmit. Hey, Harmit. I've been reading about neutrino messaging. Are HFT, high frequency trading, are HFT firms widely adopting it to further reduce latency, and how impactful has it been compared to existing protocols? I've read every Michael Lewis book there is. Yeah, but that's the extent of my knowledge on it. I don't really know much about that. I'm so sorry. Yeah. Okay, Manas, how are you from Calcutta? Great to see you, bud. Okay. Give me 1 second, guys, here. Okay, I lost my spot. Okay, Manas wrote, good morning, my dear mentor. Welcome after 5 million years. A lot has happened. Let's go. Yeah. Sorry I wasn't here last week. It's my anniversary. You wrote, what do you think of Tesla and electronic vehicles in the United States? Will Trump disrupt Tesla growth engine or just offer FUD? FUD stands for fear, uncertainty, and doubt. Your thoughts long term. Yeah. So the way I look at it is, I don't know, like in 5 or 10 years, will, I don't know, EV cars be more relevant or less relevant than they are today? Much more relevant, right? But you got to be patient if you're going to look to analyze it. I'm not going to tell you what to do with that stock, right? So, in 3.5 years, read between the lines, there could be a new administration that is a little bit more pro-environment. Yeah. But I believe in the taxi strategy longer term, generally speaking. Yeah. Okay. And then you wrote, we never give up on social media. It's a gold mine. As you said, I'm never going to ever, I'll be here for 150 years. I love it. Yeah. The longer the view, the wiser the intention. It's a marathon, not a sprint. Yeah. And then Masters of the Universe 2.0 wrote, what watches do you like? What do you wear to a finance interview? So I have probably the cheapest Rolex on the market, which I bought with my signing bonus from Citadel back in 2004 in New York City. I'm not really a watch connoisseur. Yeah. Okay. Claude CEO said AI will take most of beginner jobs soon, very soon. All of it. I'm not scared. I'm happy. What do we do? Oh, thank you. Yeah. So whatever CEO makes an outlandish comment like that, obviously they're very biased. Yeah. So I wouldn't worry too much about it. I would try to disrupt yourself by using AI, right? Always try to disrupt your own business model. before the market does. So, for example, Reid Hastings, the brilliant former CEO and founder of Netflix. Many years ago, he re-engineered the company to focus on streaming instead of DVD rentals in the mail. Wall Street hated him for it. I love him for it. You got to think long-term and disrupt yourself before the marketplace does. Yeah. Next question is, liberal arts is fine. My cousin's sister is learning it, but it is limited scope. I mean, either politics or social science or journalism or writer, poet. Yeah. I would just say, generally speaking, it doesn't matter what you study. Your network is your net worth, and relationships are always more important than product knowledge. Yeah. Networking is key. And that's why in the program you're signed up for, my website, we start with networking aggressively. Yeah, it works. Fahmed, how are you? Good to see you. You wrote this, you're stupid, Fahmed. Hope you're doing well. Great to see you. I think you're from Brooklyn, if I'm not familiar. Correct me if I'm wrong, please. Moving on to Peter. Peter, great to see you. I'm looking forward to seeing you in less than half an hour in our weekly Zoom call. Peter wrote, hey, Chris, the other versions of the quote I've heard is economists has predicted 50 of the last 7 recessions. They have a reputation for being constant doomsayers. Yeah, I don't listen to economists. They don't know what the hell they're talking about. Yeah, economists can't pick stocks. Yeah, their brain's on a stick. Like, when have we ever used in the real world supply and demand charts? Like, it's academic filth. Yeah. Question from Manas is, have you been depressed ever for a long time ever in your 20s, like I am at this stage? How do you deal specifically in an age of social media where insecurity and fear is everything everywhere? Thanks. Yeah, I'm so sorry to hear that you're going through that. A lot of people don't check Facebook anymore because people only post positive things. They get depressed after checking social media. But I've been there with you, man. I remember 6 months after 9/11, I broke down and cried. In a hotel room. I'll never forget that. I think it was depression, right? It's like 6 months after an event, it kind of hits you. I saw all 9/11 when I was in New York City and stuff. But I realized to beat my depression, I realized a lot of it comes down to diet and exercise. And there's a reason why, and it's amazing the human body is so self-correcting. So there's a reason why in my office, I have a treadmill. I try to get 20 or 30,000 steps a day. I put on a little bit of weight. I was on vacation, as you can probably see. But I feel great when I do it. I can think much more clearly as well. But you got to always prioritize exercise, right? And I don't think anybody has ever gone to the gym and afterwards told themselves, I wish I didn't work out today. Said no one ever. So prioritize exercise too, and strength training too, if you want as well. It really releases endorphins as well. And I'm not a doctor. I recommend if anybody is going through depression, talk to a doctor, please. Yeah. But the way I release endorphins, serotonin, etc., is by trying to exercise, getting the right amount of sleep. I monitor everything. I've got an Oura ring, O-U-R-A ring. I try to get enough sleep, yada yada, all that stuff. The body's a temple. Take care of it, and this works gooder. Okay. If AI takes everything, code, finance, and banking, and teaching, and art, and science, and technology, and venture capital, why will humans be needed? I mean, AI is better in everything, and it's cheaper. Yeah, we'll adapt. Don't worry. Like, I wouldn't be like a Luddite. I wouldn't fear technology, ever. Don't fear it. With the Industrial Revolution, when 96% of the population before the Industrial Revolution worked on the farms, people thought I would have no jobs. They retrained. In the 1980s, when Japanese automation and robotics was taking over, people thought, oh my God, I won't work in factories anymore. They adapted. People went into services roles. In 1998 and 1999, when Google was first, getting founded and all that stuff, a lot of people said, oh my God, we're going to use Google for everything. We're not going to need to work. We adapted. The same negative people in the fall of 2001, when Wikipedia came out, said, oh my God, we don't have to go to school anymore. We adapted. We always adapt. And I don't know, maybe we won't be working harder. Maybe we'll use technology to be much more efficient. It's very deflationary as well. We'll adapt. We always do. Yeah. Embrace it. Yeah. Okay, there's nothing to fear except fear itself. Okay, Sirkan wrote, what is your perspective on algorithmic trading and what methods do you use, if any? I don't believe in trading. I'm long-term focused. It's very, very hard to do, and only a handful of companies have ever done incredibly well. Case in point is Renaissance Technologies. You can go to rentech.com to learn more. It was founded by Jim Simmons, who used to work at the National Security Association, the NSA. He quit in '83 to start Renaissance Technologies, which has thousands of Linux servers running in parallel picking stocks. And he uses AI, machine learning, algorithmic trading, and his average gross adjusted return since then has been over 60%. That's an exception to the rule, though. Yeah. I'm more of a long-term investor. Yeah. But do research on Jim Simmons if you want to. God bless me, passed away recently. Yeah. Okay. Harmit wrote, when you had a chance to chat with Ken Griffin, was there one thing that stood out to you, something unique in the way he thinks and approaches markets? Yeah, it was just a half-hour conversation one-on-one with him in his office in Chicago, South Wack, or wherever it was. His headquarters now are in Miami. Yeah, smart he moved there because taxes are lower, etc. Yeah, but I don't think if anything really stood out. We talked about stocks. We talked about code a bit. A lot of the code in Citadel Systems back then was still running on the code he created back, I think, in the 90s or so. Yeah, he's multifaceted. We talked about video games a bit too, like sports video games, stocks, and yeah, good dude. Very smart. Yeah, and personable too. Yeah. Okay. Ray wrote, if you own one, stock A, which is defensive, grows slowly at 5% capital appreciation per year, but pays only a 4% divvy, and 2, stock B, which is growth, grows quicker, 10% capital appreciation per year, but pays no divvy. Don't they give more or less the same ROI at the end of the day? But stock A is more stable. Yeah. Stock A, which has a higher dividend yield, which is a value investment, probably has a lower beta as well. Yeah. Now, it depends, right? If this, it all depends on the growth of the stock per year over the long run. If it has a high dividend yield, but earnings aren't really growing and you don't expect P multiple compression or expansion, maybe you'll only make what the dividend makes over time. Whereas stock B, which I prefer, it could have a much higher market cap in the long run if they can execute. Yeah. Now, a lot of companies that are very expensive don't have earnings. They could be very profitable immediately if they cut their expenses. They cut sales and marketing, G&A, and R&D. But if they did that and they generated a ton of profits, then they'd be sacrificing growth because they won't have as many salespeople to hire, right? That will drive the top line. Or they might not be investing as much in R&D. I love growth investments better. It's just me. Now, a lot of people when they're in university and they're younger, they're value investors because they're kind of taught buy low, sell high, buy if the PE is low, etc. I've learned otherwise though, because I love to look at stocks that investors are going to like. I love to look at what I think earnings are going to be in 5 years. And that's why when I worked in the hedge fund industry, I remember I owned Amazon for years. People would say, oh my God, it's a widow maker. Chris, why do you own that stock? It trades at 100 times earnings. And I said, no, it does not trade at 100 times earnings. It trades at 3 times my earnings estimates in 5 or 10 years. Just be long-term focused. It's a better way to invest. And you'll sleep better at night as well. Yeah. But I remember when I went to Columbia for my MBA, so Warren Buffett went there as well, Columbia First Masters. Back in 1999, he came in and he lectured one of our classes. It was a real treat. And one of my classmates put his hand up and started pitching a tech stock to him. And he was so polite. He grandfatherly interrupted 30 seconds into the pitch. He said, son, let me stop you right there. I don't know where this company is going to be product cycle wise, 12 to 18 months from now. As a result, I just won't invest. It just wasn't his cup of tea. Yeah. To each their own. Chacun son goût. Yeah. I expose you to value investing, growth investing, other investing styles in the products I sell on my website too. Yeah. Okay. Would it be possible ever suggest somebody to make an algo trading or quant fund, even small one? What program is needed? I mean, languages, how easy is it to make? Probably Python. That's what I would say. I'm not an expert in that area, though. Yeah. I'd be against that, though, because what happens with a lot of these quant-based funds is if you're trying to make money on a monthly basis, which nobody can do, right? Hardly anybody can do. What happens is stocks go up and down for random reasons you just can't control. Yeah, that's why I'm much more adamant of being a long-term investor. Use the templates I provide you with in the program you purchased, and try to invest in companies that are 5x5s, 500% return within 5 years. Obviously, you won't be right most of the time, but directionally you could be right if you have a lot of conviction and do the work. Yeah, and we can all run circles around Wall Street professionals. Yeah, and I provide you the tools to do that as well. Okay, is it unwise if the S&P 500 S&P ETF represents 50% of your entire portfolio? I think that's pretty high. Yeah, I do. Yeah. Okay. Okay, next, Ray wrote, should we always invest only in companies that are leaders in their industry? It depends. Like in the tech sector, usually the top 1, 2, or 3 companies dominate. Everybody else is a loser investment. Yeah. But that's for larger cap companies, right? I love to look at smaller mid-cap companies. You can look at the Wilshire 5000 Index and find companies that are small but growing. And the ones you want to look at are the ones that are partnering with big tech firms, kind of like Microsoft did in the early days when it partnered with Big Blue, IBM. Yeah. And you can read all about that in the 10K. Yeah. Focus on the management team first. What is the most important factor to choose a company in financials? And then you wrote healthcare. Yeah. Number one, management team in both. Now, financial services and healthcare are very regulated markets as well. So you might want to look at if government administrations are deregulatory in general, which we kind of have with financial services with Trump, which is why financial services stocks have done pretty well. Yeah. But don't just look at that. You got to look at 100 different factors, which I have in that spreadsheet I told you about earlier. Okay. All right. Your strategy of never investing in a company without the founder means Tesla will be investable in 10 years. So will Google and Robinhood and many companies. Yeah, I don't understand the question, sorry. But generally speaking, I don't invest in companies where the founder has left, period. Yeah. And turnarounds only work in tech like one per decade, right? And if you want to learn more about this, you can always do a search on VentureBeat. Chris Haroun. When I worked in venture capital, there's a publication called VentureBeat. I think it's the number one VC thing website. I wrote an article here called "When a Company Founder Resigns, Investors Should Head for the Exits Too." Yeah, and I believed in it then, back 2014 when I wrote this, and I still believe it now. Yeah. Okay, Kumar wrote, "Hey Chris, I'm Kumar Satyam from India. Pleasure to meet you. I completed your business plan course. It was amazing blueprint for me. Thank you. I'm going to start a company very soon. Hope you and I can have coffee together. Thank you. And if you want, you can learn more about my venture capital bootcamp on my website. I have bootcamp programs where you get access to me 7 hours every week in small group meetings. That's 300 hours per year plus one-on-ones. Just go to harounmba.com and you can set up a call with one of my staff. Yeah, thank you. Yeah. Okay. Manas wrote, do you think there's too many AI companies and too less applications and copycat product? Yeah. So generally speaking, whenever there's a new gold rush or new shiny toy, tons of the capital markets are pretty efficient. A lot of companies rush into that sector, and there's a lot of crap out there. And we saw that with dot-com bubble 1.0 back in the late 90s. There was crappy companies like, pets.com, et cetera. Same thing with cryptocurrencies. There's more cryptos now than there are fiat, meaning paper-based currencies. Most are garbage. Yeah. But human nature repeats itself. We saw it also back in I think it was the 1600s with the tulip bulbs craze in Holland. Yeah. All ships rise. Then there's a crash, and only the best survive. And the best ones that survive are the ones with the best management teams, always. No exception to that. Okay. What is NAV and how important when valuing a company or an asset? NAV stands for net asset value. It's basically the value of the company if you get rid of all the debt. Yeah. Think of it as equity value. So assets equals liabilities plus equity. Just think of equity, rearrange that equation, equals assets minus debt. Yeah, sort of. Yeah. But I care more about, I don't care about the breakup value of companies. I care about the earnings potential in the long run. Yeah. Next up, we have Christopher Harrison. How are you? I'm Christopher as well, but I'm only called Christopher by my mom when I'm in trouble. You wrote, hey, Chris, thank you for all the helpful advice you provide. Thank you for being here. Yeah. Do you practice any particular techniques for keeping so much information in your head? I guess, I mean, exercise and diet, right? So what I found when I was younger was when I was in university and high school and stuff, the first hour of studying every morning, I got a lot done. Right? I was very, very productive. And then at night, 10 hours of cramming was less productive than the 1 hour in the morning. So what I've learned by biohacking is that if I exercise all day long, right, at a slow pace, like 20 or 30,000 steps per day, is easy to do, then what happens is you retain a lot more information and it feels like you just woke up. So if you work 12-hour days and you feel like you just woke up, you're feeding oxygen to your mind, your heart and stuff, you're much more productive. So that's what I found works for me, but do what works for you best, please. So I love to biohack a lot. Yeah, I take a ton of herbs and vitamins as well. It's a little bit out there, right? Do your research first. These are vitamins and herbs I take every day. I believe that we're all deficient in 1 or 2 vitamins. We don't know what they are. But if we blast our bodies with the 100% DV every day, there's a chance we'll be okay. Yeah. But I don't drink. I don't smoke. I don't smoke anymore. I don't smoke any less. I only smoke when I'm on fire. Terrible humor. So, yeah. My only vice is coffee, which I love. I absolutely love coffee. I think it's good for you. I have 1 cup a day. Okay. Yeah, sleep is important too. Always 7 to 8 hours every night, no matter what. Yeah. Okay. Jamie Dimon said the 10K is a piece of crap now, as it's full of BS, and he reads only letters from Buffett and Bezos and Andy Jassy. I adamantly disagree with him. Yeah. I would say that the 10K is only a piece of crap if you don't have a big 4 auditing firm auditing your financial statements. Yeah. And that's part of what's called the MD&A and the audit report. In an upcoming course I'm releasing in a couple of weeks, we look at this in a lot of detail, right? So the 10K has so much great stuff in it, right? So 10K, there's the audit report and the MD&A. Okay. And the audit report is crucial to analyze. And the reason it's crucial to analyze is the big 4 accounting firms, if they bless the company, it gives investors comfort to know that the numbers are legit. Okay. And we look at footnotes as well. And what's going to come out of this is here a 1-pager where we're going to analyze the audit report in a lot of detail. I'm still working on it. And a massive detailed report. Right, so audit report, all that stuff. All this comes from the 10K, which is a gold mine for data. Yeah. Obviously, it's not your only source of research on the company, but it's a great source. Yeah. Okay. Next question is this: is Bitcoin going to become the reserve asset like gold, or more than gold because it appeals to younger people and has year over year of 57% since 20. Yeah. I mean, I'm bullish on it longer term. You know, there's still risks, right? It's not regulated by the SEC. And Jamie Dimon, who's been bearish on Bitcoin since it was like $1, I respect him though. He's basically publicly said, well, how do we know there's only going to be 21 million Bitcoin that'll be mined by the year 2140? How do we know? We don't. And that's why it makes sense to always have good risk management. Yeah, meaning don't make any position size more than 5% of capital. Yeah. And then you wrote, also, funds are hoarding Bitcoin. It'll become an asset for the rich and wealthy only. Yeah. I don't know. I do think the Chinese government is buying a lot of it, as well as gold. And one of the reasons, I'm not a conspiracy guy, but it's just logical. If you're going to invest less in U.S. Treasuries in the long run, what are you going to buy? Probably this, probably the digital version of this, which is Bitcoin. Yeah. Okay. How would you use a straddle and a strangle and an iron condor long and short term for a year for leaps? Imagine if the stock is Palantir, Coinbase. Thank you for everything, being so patient. Yeah. So what I recommend you do is go in your curriculum to FA44. That's Finance and Accounting Semester 4, class number 4. And what I do is I walk you through 35 different option strategies from scratch. So when you're talking about an iron condor, you can sell or buy it. Backspread with puts, all these things here. These things use 4 or 3 different option strategies, etc. And there's tons of them. Yeah. So, and you could run a paper portfolio just to practice for a while first. Yeah. Again, go to FA44. That's Finance and Accounting Semester 4, class number 4. Yeah. If a fund manager is skeptical of risk and believes in dividends and safe assets, how would you pitch him or her as a newbie on a Zoom that you'll pitch, and how? Thank you. Yeah. So what you want to do is you want to do a full write-up first. Okay, so step 1, in your curriculum, the product you bought, you're going to go to EMS 42. That's Economics Management and Strategy, Semester 4, class number 2. Then what you're going to do is you're going to download this spreadsheet here. Okay, you're going to do an investment write-up on the company, and then you're going to print out your executive summary to show them on a Zoom call, as well as your detailed report and your financial model from scratch, which I explain again in EMS 42, Economics Management and Strategy, Semester 4, class number 2. Thanks. Okay, and anything wrote, hey Chris, thanks a lot for answering my questions. Thank you for asking them. I would do this for free forever. I live for this. It's fun. I'll ask you one more question. As many as you want, buddy. What do you define as true success? So we're here to serve others. You know, our goal should be to add more value to help the planet be better when we leave this earth than when we entered it. We are here to serve others. So for me, success means helping others. And so I use a lot of the profits of my companies to build schools in Africa. And I'm going to build 1,000 in Africa. It costs me $100,000 per school with all expenses. So 1,000 times $100,000 is $100 million. So that's my goal. Yeah, we're here to serve others. That's what success is. How have you benefited other people? And I'm not just talking about wealth. You know, the problem with Western society is people tend to worship those with a lot of money, like the Elon Musk of the world. Is he happy? Is he really happy? Success is also happiness. Yeah. And the Dalai Lama, there's a really good book you should read called The Art of Happiness. And the Dalai Lama said in that book, the problem with Western society is we sacrifice our health, our entire lives in order to make money. And at the end of our lives, we sacrifice all of our money to maintain our health. And then we look back and we realize we never really lived to begin with. So success is being happy today and every day. Don't you want to be happy? That's what success is to me. Not the number of zeros beside somebody's bank account. It's happiness and what you've contributed to the world. And it's not about getting credit either. There are a lot of people that mentor, help other people, do 20 random acts of kindness every day. That's happiness. Okay, Pulasti wrote, hey Chris, how are you? Always great, good to see you. And your question is, how can I build confidence when I don't have much experience with a job or a task? What do you think about that? Yeah, it's all, like I started off the call with the Rodin sculpture. I think, therefore I am. Confidence is all here. Yeah. Alexa, stop. That's my 5-minute warning. I have to wrap up this call. And I think I'm a religious guy. So I don't really worry about stuff, about career and things out of my control, because God already knows what's going to happen. That puts me at ease. And if we over worry, I kind of feel like I'm questioning my faith. Things are never as bad as we think. And Winston Churchill once said this: I once met a man on his deathbed who talked about all the worries he had in his life, none of which came true. It's not work that kills us, it's worry. Think about all the times we freaked out and over worried about crap out of our control that never came true. Don't worry. Everything works out well. I've got tremendous faith as well. All right, and I'm going to have to wrap up this call in a second. There's tons more questions. For those of you in my MBA programs or boot camps or anything you buy on my website, I've got the webcast starting in 4 minutes. It's going to be a couple hours. It's a Zoom call as well. Yeah. All right. The next question is, what's your strategy for autocracy? I don't know what that means, but I saw a movie called Idiocracy, which I loved. Yeah, I don't know what that means, sorry. Next up, Prophet wrote, how much money would I need to save if I wanted to move out of my parents' house to rent comfortably if rent is around $2,000? Yeah. So usually what happens is if you don't have much of a credit history and you want to rent, landlords usually want a first month and last month down payment, right? So you might have to give up $4,000 initially. Yeah. And you might have to get your parents to co-sign as well on the lease. Yeah. And I've co-signed on family members that don't have credit history or bad credit as well. Yeah. Okay. All right. And there's a number of more questions. I'm going to wrap up the call now. David wrote, Chris, the Jays are in second place in the AL East. I love it. We're 3.5 back of the Yankees. We're first in the wild card as well. We swept the Cardinals. It was awesome. I think our MVP for the first half is Kirk. He's great. Yeah. Good things come in small packages. Yeah. 4 games back of the Yankees. Yeah. Excellent. You wrote, great to have you back. Looking forward to our next class. Great to see you, brother. God bless you. All right, guys, what I'm going to do is I'm going to wrap up this call by playing a short video that I licensed. It's a Steve Jobs interview from the Silicon Valley Historical Association, which will change your life. It's great to be back. If you're in one of my paid products, I'll see you in a couple of minutes on a Zoom call. Otherwise, God bless you and have a great week. And I'll see you next week for week 320. Thanks.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.